Good. How are you? Good morning.
Morning.
Good morning.
Morning.
Good morning.
Hi, Bruce Livingston's here.
Hi, Bruce.
Morning. Hi, Julie.
Hi. Maybe when all the main revenue service or DAFS people are here, maybe someone from that group can just let us all know when we're ready to start. We also need a lot more committee members right now, obviously.
Mhm.
Yeah. Yeah. No, you know what's funny? They now use an auto injector of Novocaine, and it just targets the tooth. It's this thing's amazing. They start drilling immediately. It took 20 minutes to do the film. Oh, there's some really new modern tools. It's a new dentist. He's probably 35. Big difference from my former dentist. All right. Good luck. Don't worry about it so much.
How's everyone doing this morning?
Good morning.
Hey.
Good morning, Mo.
Morning, Ann.
I know we've got several people here to make presentations, and we technically have quorum now with 7 members, so I guess we might as well get started. Does that seem okay, Representative Terry?
Yes, absolutely. And Lori texted me a couple minutes ago. She will be jumping in as soon as possible. She was on another call earlier.
Okay.
Great.
Yeah. We'll gavel in the start of the meeting. So we will get started with the Committee on Taxation, second day of orientation. We'll begin with committee introductions. Why don't we start with Representative Matlack?
Good morning, all. I'm Ann Matlack. I represent represent House District 92, which includes the communities of Cushing, Thomaston, South Thomaston, St. George, Matinicus, Creehaven, and the Muscle Ridge Islands. I also serve as the chair of state and local government.
Representative Kryzak, are you with us?
I am.
Okay, you want to introduce yourself?
Yeah, I'm Ted Kryzak. I represent District 20, Acton, Lebanon, and Shapley. I'm sorry, I'm still working right now. I'm driving, so I'm listening in. I'll be home soon. I'm the lead on taxation for the Republican Party, and I'm also on the redistricting committee.
Excellent. Representative Carmichael?
Yes, I'm Mickey Carmichael. I represent House District 137, which is parts of Scott County, Penobscot County, Washington County, and a whole list of towns that I won't go through each one of them with you. Good morning.
Representative Hanley?
Yes, good morning. I'm Representative Jeff Hanley from Pittston. I represent District 87, which is Alma, Pittston, Wiscasset, and Randolph. I'm also the Republican lead on the Environmental and Natural Resources Committee.
Representative Sachs?
Good morning. My name is Melanie Sachs. I'm a newly elected representative from House District 48, which is Freeport and parts of Pownell. And good morning, everyone.
Welcome. Representative Terry?
Good morning. I am Representative Mo Terry. I represent District 26, the west side of Gorham, and I am serving as the House Chair for this committee for the first time, but have been on the committee now for, this will be my 5th year. So welcome, everybody, and welcome, Representative Hanley. It's nice to see you.
Yes, thank you.
And I'm Senator Ben Chipman. I represent Senate District 27, which is part of the city of Portland. Senate chair of this committee. I also serve on the Transportation Committee. And so we'll get started. Just a couple of housekeeping things briefly I'd like to mention. One is that we do need to adopt committee rules. And so that's something that should have been emailed to you by our analyst. I'd like to also introduce our analyst, Julie Jones, who's with us, as well as Avery Page, who's our committee clerk, who's with us as well. So Julie did email out the committee rules. I just want to ask committee members to maybe take a look at that over the weekend, and at our next meeting, we could take that up and see if there's any suggested changes to those, or if not, we can adopt them as they're worded. But if you could take a look at that between now and the next time we meet, that would be great. And then we can adopt those hopefully at our next meeting. Also, just wanted to mention, unless there's no objection, just generally speaking, when we start committee meetings and do introductions, we'll start with whoever's at the top left-hand side of our screen and kind of work our way across to the right, and then work our way down to the next row, beginning with committee members and then ending with the House Chair, Representative Terry, and myself. Other than that, do you have anything, Representative Terry, before we get started?
I think we had a couple members join us. Senator Daughtry, you want to introduce yourself?
Good morning, everyone. I'm Senator Daughtry. I represent Senate District 24, which is Brunswick, Freeport, North Yarmouth, Harpswell, and Pownell. And I'm sorry, my Zoom, I think, just kept getting me in a loop in the waiting room. So,
okay. Senator Pouliot, you want to introduce yourself?
Yeah, can you guys hear me okay?
Yes.
Great. Good morning. State Senator Matt Pouliot, Senate District 15, represent the towns of Augusta, China, Oakland, Sydney, and Vassalboro. And I just have to say, I'm pretty excited to have Senator Daughtry to be serving with Senator Daughtry on a committee again. So good to see you this morning, Maddie.
And Julie?
Yeah. Oh, well, yes.
You had your hand up.
Oh, thank you. Yes. I just wanted to mention the rules that Senator Chipman referred to were in that big packet that we talked about at the last meeting. I will separate out the rules provision and send it to you, so you'll just have the rules in an easy link, so you won't have to go hunting through that big package.
Thanks very much, Julie.
Thank you, Julie. Okay, well, I guess we'll get started now with our orientation with presentations from the Department of Administration and Financial Services as well as Maine Revenue Services. So looking at the agenda, the first person to present to us would be the Commissioner of DAFS, Kirsten Figueroa. If you'd like to begin, welcome.
Hi, good morning, Senator Chipman and Representative Terry and members of the Joint Committee on Taxation. It's nice to see you all. My name is Kirsten Figueroa. I am the Commissioner of the Department of Administrative and Financial Services, otherwise known as DAFS, which among many other things encompasses the Bureau of Revenue Services. Maine Revenue Services is an important part of DAFS. They are one of our largest bureaus and are tasked with collecting, evaluating, and tallying precious general fund revenues. Most of the workload and staffing at MRS are dedicated to tax administration and led by our Executive Director, Jerome Gerard. The Office of Tax Policy is responsible for providing legal and economic analysis for the administration's tax proposals, as well as legislative bills. This group is led by Associate Commissioner Dr. Michael Allen. This distinction will become clearer during the presentations that they'll each make later this morning. I want to use my brief time, and I thank you very much for it, before you to draw your attention to the fact that the economic disturbance created by COVID-19 and the federal government's extraordinary response have created completely unfamiliar situations and given rise to unprecedented questions of tax policy and acknowledge the tremendous work that MRS staff has done these past 10 months. Next week, you'll take up the matter of tax conformity as an example within the supplemental budget. MRS deals with issues of tax conformity annually. Conformity, as many of you know, is the review and alignment of our state code vis-a-vis federal tax code. And each session, this department presents this committee with a tax conformity bill that typically contains minor changes, affects a limited number of taxpayers, and has a minimal fiscal impact. That is not the case this year. The Families First Coronavirus Response Act, the Corona Aid Relief and Economic Stability, or the CARES Act, and most recently, the Consolidated Appropriations 2021 Act, CAA, all included significant tax provisions applicable not only to the 2020 tax year at the federal level, but as well as tax years forward and back. Tax conformity is being considered within the supplemental budget because it is of urgent importance to taxpayers filing their 2020 tax returns. Many of the tax treatment changes were extraordinary in order to stimulate the economy. They are of sizable financial consequence to a great many taxpayers who have fallen on tough times as a result of the pandemic and its implications. And some will demand difficult decisions because of the negative fiscal impact they would have upon the state budget. The MRS staff has done yeoman's work to thoroughly review these massive pieces of federal legislation, analyze their impact on taxpayers, reconcile them with existing Maine law, and estimate their fiscal impact so that the administration could bring forth a well-informed, thoughtfully considered recommendation to the legislature. This has been particularly true these last 3 weeks as staff work through the changes in the CAA, which came 3 days before the end of the tax year and just 10 days before the governor's budget was due. We anticipate that there are more tax changes to come, actually. The Biden administration has already proposed another stimulus package to the new Congress, and the next round of changes are likely to come in the middle of this legislative session. So we will continue to be in touch about that. In the meantime, we are braced for this tax filing season. We are bracing for this tax filing season to be the most challenging that many long-term Maine Revenue Service employees and taxpayers actually have experienced. The tax returns filed this spring will reflect the economic upheaval experienced in 2020. Taxpayers will have much to navigate, like learning that unemployment benefits are taxable, or the implications of living or working remotely in a state different than before the pandemic. If individuals' circumstances have changed, so too will the tax returns they file and their bottom line. Maine Revenue Services has always taken tremendous pride in providing exceptional customer service, and MRS staff will continue to work through these emerging issues with taxpayers and tax preparers as they encounter them. But we need to collectively recognize the incredible challenges to taxpayers, tax preparers, and Maine Revenue Services this filing season. You will hear from the Executive Director of Maine Revenue Services, Jerome Gerard, as well as our Associate Commissioner for Tax Policy, Dr. Michael Allen, both of whom I mentioned previously. For those of you who are new to this committee, these two will be a wealth of information for you, as will be the professionals who work for them in and on the varied tax divisions and topics. Especially on the heels of all this emerging federal legislation meant to provide stimulus through the tax system, there is ripe opportunity to better understand Maine's tax structure and general tax policy, which I have to say are significant. Significant effort goes into the tracking and compilation of the contents of what we call the Red Book, the Tax Expenditure Report. This book details the cost and impact of each of Maine's tax deductions, exemptions, exclusions, and credits, some of which affect few or no filers. Also, there's an opportunity to examine the work by the Office of the Program Evaluation and Government Accountability Office, OPEGA. Again, a significant amount of staff time, both MRS and OPEGA, is spent on these reports. The OPEGA work plan requires the evaluation of several tax expenditures each and every year. As you settle into your roles and dive into the details, it would be good to know if these efforts are giving you the information that you need as you deliberate Maine's tax policy. And for those of you not new to the committee, we welcome you back. As you can all imagine, with DAFS performing a central role in the pandemic response, including the work we've described at Maine Revenue Services, it's been very busy. Having these conversations gives us a second to take a deep breath on all that we've been able to accomplish over the past year. It has been, and still is, literally a whirlwind. Throughout it all, I must say that the team at Maine Revenue Services has been amazing. They've worked incredibly hard under difficult situations, and they've done so with kindness and empathy, professionalism, and accuracy. In closing, I ask the committee to be mindful of the challenge and the work Maine Revenue Service has already been charged with, and consider how the policies you pass can simplify tax administration and tax filing for Maine citizens. We see that as the ultimate goal of this work, to ensure that Maine's application and collection of revenue is done fairly and accurately, and in a way that supports the larger policy goals and purpose of this great state. We look forward to working with you to that end. Thank you so much for giving us this opportunity. And I should mention that Dr. Allen will also be in front of appropriations later today, talking about the details of the Red Book, the Tax Expenditure Report. So there's an opportunity to hear about it twice today.
Excellent. Thank you, Commissioner. Are there any questions from members of the committee for the Commissioner?
Mr. Chair.
Yes, Representative Krajicek.
I just have a quick question. Since we're going to be with appropriations next week, I saw in the supplemental budget that they're taking away $20,000 from the appeals. I was curious whether that's a good idea or not, where taxes came in so late, and with all the different things that are happening to tax law, to take money from the appeals, because they haven't been any appeals. But is it possible that there could be back to normal, further in the year?
So that's a good question. Thank you. Actually, we did an evaluation of the all other that was in that account, and they've almost never spent to the level that they have appropriated. And so this just put them even during times when they do or don't. So everybody felt quite comfortable that this put them to a level of expenditures that they would normally expend.
Okay, so this was a decision made by the department, not by appropriations.
Correct. This was
Okay.
our proposal. Yeah.
All right, thank you.
You're welcome.
Any additional questions from members of the committee?
So I thank you very much. I'm going to pop off, and you'll be well educated and entertained with MRS and Dr. Jerome and Dr. Allen. And so, and I thank them both. And as well as, I'm sorry, I know that there are other MRS staff that are going to present today, and I'm sorry I don't have your names, but thank you very much in advance, MRS staff.
Great.
So we'll see you along the way. Welcome back.
Excellent. Thank you, Commissioner. Much
Thank you.
appreciated. So we'll now welcome Dr. Michael Allen, the Deputy Commissioner for Tax Policy.
Good morning. Actually, I think we would, if we can, Mr. Chair, have Anya Trundy speak next. I was going to speak last, if that's okay.
Okay. Yeah, I'm just working down the list in the order they're listed on the agenda, but that's fine. That would be certainly welcome. Anya Trundy, the DAFS Director of Legislative Affairs.
Good morning. I just wanted to take a brief minute to introduce myself to the committee, members new and old. I am the Director of Legislative Affairs for DAFS. So I work as a liaison between the legislature and the department, as well as the governor's office for all bureaus of the department, but definitely including Maine Revenue Services. So I look forward to working with you all throughout the upcoming session. And please don't hesitate to contact me if you have any questions. I'm here to be a resource and a conduit for you. Thank you. Excellent.
Thank you, Ms. Trundy. Is there any questions for Ms. Trundy from members of the committee? Seeing none. Who would like to speak next? I didn't catch everything Dr. Allen had said. Was there someone else that was going to speak before you, Dr. Allen, or would you like to go next?
I think Dr. Allen would like me to speak next.
Sure. Well, welcome, Jerome Gerard, who's the state tax assessor.
Thank you. Good morning, Senator Chipman, Representative Terry, and members of the Taxation Committee. My name is Jerome Gerard, and I serve as the state tax assessor and the director of Maine Revenue Services, or MRS for short. I'm here today to provide the committee with an overview of the work we do on behalf of the people of the state of Maine. This is something we typically do at the beginning of each new legislature, and I believe that the Taxation Committee members have found it helpful in the past. Joining me are the directors of the agency's various divisions who will give a brief overview of their areas of responsibilities and help answer any questions you may have. The Bureau of Revenue Services was established to collect the revenues necessary to support Maine state government and to improve the administration of tax laws in Maine at both the state and local levels. The Bureau assesses and collects many different state taxes, including sales and use taxes, the service provider tax, individual and corporate income taxes, motor fuel taxes, the estate tax, various business taxes, and special industry taxes, cigarette and tobacco products taxes, and property taxes in the unorganized territory. In fiscal year 2020, these taxes generated $4 billion in general fund revenues, $219 million in highway fund revenue, and $136 million in other special revenue fund revenues for the state of Maine. The Bureau also collects just over $3 million for the Department of Labor, Main revenue's work is distributed among several divisions. The Bureau's Income and Estate Tax Division administers income and estate taxes, withholding taxes, insurance premium tax, and the financial institution's franchise tax. The Sales, Fuel, and Special Tax Division administers the sales and use taxes and various excise taxes. The Service Provider Tax, the Recycling Assistance Fee, motor fuel taxes, and various other special taxes and tax refund programs. Like the Income Tax Division, the Sales Tax Division contains an audit unit responsible for auditing and assessing taxes and providing taxpayer education. Each division is also responsible for issuing decisions reviewed by our general counsel. In cases where taxpayers have filed administrative appeals of tax assessments or other agency determinations originating in the division. The Property Tax Division administers the annual state valuation, training, and support services to municipal assessors. The assessment and collection of property taxes and motor vehicle watercraft excise taxes in the unorganized territories of Maine. The Business Equipment Property Tax Exemption, sometimes called the Betty Program, the Tree Growth Tax Law, the Maine Homestead Property Tax Exemption, the Real Estate Transfer Tax, the Commercial Forestry Excise Tax, and reimbursement for several municipal property tax exemptions. As you know, property taxes in Maine are assessed at the local level, but are governed by state law. And the state tax assessor is charged by statute with general oversight authority over the administration of property taxes in the state. We also have a criminal investigation unit, which investigates various types of criminal tax violations, including tax evasion, and refers such cases to the Attorney General's office for possible criminal prosecution. The Operations Processing and Quality Assurance Divisions provide mail processing services, deposit tax revenues, provide bureau-wide business services, and help to operate the agency's computer network. The Quality Assurance Division helps to maintain automated systems within the Bureau. It also is responsible for the Bureau's electronic funds transfer and internet filing programs. We have made tremendous progress in recent years in using advanced technology to the state's advantage, including modern telecommunications capability. The investment has greatly increased the efficiency of all our operations and has also ensured excellent customer service. You'll hear more detail in a moment from a representative from the division, but I will note that last year, 83% of our revenues were received via electronic funds transfer. That's $3.8 billion that were transferred bank to bank with no effort on the state's part. And 89% of the individual income tax returns were filed electronically last year, a new record. The Operations Security Unit of this division is charged with protecting confidential tax information and MRS operating systems from theft and cybersecurity attack, as well as providing for the security of our employees and the two buildings that we reside in. Finally, the MRS Compliance Division serves as the Bureau's primary collection group for delinquent taxes, while the work of the Tax Compliance Unit is focused primarily on pursuing tax returns that are not filed in a timely fashion. Most of our staff are located in Augusta, but we have one satellite office in Portland, which houses about 32 people. MRS's administrative budget for fiscal year 2021 is $42 million. $26 million of that amount is personal services, and $16 million is for all other expenditures. However, in FY 2020, the Unorganized Territory Educational Fund reimbursed the general fund 1 million for work performed by MRS, effectively reducing the MRS all other costs to $15 million. Today, Maine Revenue Services administers the state's taxes, fees, and reimbursement programs using 30-year-old technology. To address the operational risks associated with data technology, MRS has embarked on a 4-year state tax administration and revenue systems project, in short, called STARS. On Wednesday, October 21st, 2020, MRS officially kicked off the STARS project to modernize its outdated systems. The official beginning of STARS represents the culmination of MRS's efforts over the last 3 years to make the project a reality. MRS began the STARS journey with the development of a business case that details the rationale for the project, along with the project objectives, goals, and benefits, which are primarily focused on the opportunities to improve customer service, data security, and operational efficiency. Following development of the business case, MRS dedicated several months to develop a detailed request for proposal, which included more than 2,000 business and functional requirements. After a thorough analysis of the vendor bid responses and vendor demonstration, MRS selected Fast Enterprises to implement its commercial off-the-shelf solution called GenTax. It's an integrated tax software system. Fast is the industry leader in the integrated tax space. More than 30 states have selected Fast to modernize their respective state revenue systems, including our neighbor states, Massachusetts, New Hampshire, Vermont, and Connecticut. For taxpayers and practitioners, the most notable benefit of STARS will be the significant expansion of online service functions. Currently, MRS provides taxpayers the capability to file only a handful of tax types online. With STARS, taxpayers can file online each of the more than 40 tax types MRS administers. Additional examples of expanded self-service capabilities include online registration for all tax types, taxpayer-initiated payment plans for all tax types, taxpayer authorization that enables a third party like a CPA or an enrolled agent to perform online functions such as file a return and make a payment on the taxpayer's behalf, electronic bills, and online access via mobile devices. MRS will implement STARS over a 4-year period with annual rollouts of defined groups of taxes. The first rollout, which includes corporate tax and 11 other taxes, is scheduled for October 2021. Thereafter, there are 3 additional rollouts each October, with the final rollout in October 2024. I'd be happy to answer any questions you may have. Thank you for your attention, and I look forward to working with the committee during this legislative session.
Excellent. Thank you, Mr. Gerard. Is there any questions from members of the committee? Seeing none, thank you for your presentation. Much appreciated. Look forward to working with you as well. I guess we'll now go to Heather Popadek, the MRS Director of Income Tax Division. Is Heather with us?
Yes, I'll be right. Electronic stumblings here. Good morning, Senator Chipman, Representative Terry, the other distinguished members of the Taxation Committee. I'm Heather Popadek, Director of the Income and Estate Tax Division at Maine Revenue Services. My education includes a bachelor's degree from the University of Maine at Orono, a master's degree in accounting from the State University of New York at Albany, or SUNY Albany, and I'm a licensed certified public accountant in the state of Maine and also a certified Maine assessor. I began my individual income tax preparation experience in New York and continued with income and estate taxes at a Big Four national accounting firm in Charlotte, North Carolina. My private industry experience includes providing tax and financial planning services at Bank of America, also in Charlotte. When I moved back to Maine about 17 years ago, I spent a year at a large local public accounting firm before I accepted a position at Maine Revenue Services. I have been in state service for 16 years now, and my first 11 years as a tax analyst in the Portland and Augusta offices before assuming my current responsibilities. Now you have received or will receive a handout on an overview of the Income and Estate Tax Division that includes a summary of the annual number of returns filed for the taxes administered by the division, a high-level organizational chart, and important contact information. Let's see if I can go ahead and put that up as a share. So the Income and Estate Tax Division administers the following tax types. We have the individual income tax, the fiduciary income tax, corporate income tax, franchise tax for financial institutions like banks. We have the estate tax, insurance tax, which has the premiums tax, the fire prevention tax. So with the fire prevention tax, all monies collected are transferred for expenses incurred in administering all fire preventative and investigative laws and rules, and in educating the public in fire safety. So approximately 76% of the funds are sent to the Commissioner of Public Safety, the Office of the State Fire Marshal, and approximately 24% to the Maine Community College System, Maine Fire Service Institute. We also have a surplus lines tax for insurance also. Not a tax, but withholding program. We have the employer withholding for payroll and non-wage payments. We have real estate withholding, and we have pass-through entity withholding. In addition, we oversee several income tax credit programs, including, most notably for individual taxpayers, Child and Dependent Care Credit, Adult Dependent Care Credit, Earned Income Tax Credit, Educational Opportunity Tax Credit for graduates who are repaying student loans, Property Tax Fairness Credit, Sales Tax Credit, Fairness Credit, and others. Most notably for businesses, we oversee the Maine Capital Investment Tax Credit, the Pine Tree Development Zone Credit, the Rehabilitation of Historic Properties Tax Credit, the Educational Opportunity Tax Credit for employers who pay student loans for eligible employees, the Employment Tax Increment Financing Credit, or ETIF, and the Certified Visual Media Production Credit, and others. So for 2020, the division was responsible for approximately half of the actual tax receipts reported to Maine Revenue Services. For each of the income taxes and related tax credit programs, the division also employs methods for detecting fraudulent activities, such as identity theft and refund fraud. During calendar year 2020, just over 1,000 fraudulent returns were identified, for which refunds of over $2.4 million were stopped, which is an average refund of over $2,400. Over the years, as fraudulent activities have grown, fraud detection has become a cooperative effort shared by the Internal Revenue Services, state taxing agencies, and other industry partners. The Income and Estate Tax Division provides taxpayer assistance to Maine taxpayers and tax professionals through trained staff who, during 2020, answered over 57,000 phone inquiries and almost 18,000 emails. The division's trained staff also assisted taxpayers on the completion of income tax returns and refund requests. The division maintains taxpayer educational materials online, including current and prior year tax forms, instructions, frequently asked questions, guidance documents, and rules. Division staff provide a tax return preparation assistance to various tax professional groups throughout Maine and part of New Hampshire, such as Maine Association of Professional Accountants, or MAPA, New Hampshire Society of Accountants, Tax Counseling for the Elderly, various agencies on aging, legal groups, community action programs. This year, training is conducted virtually. Tax practitioners are able to contact Maine Revenue Services staff directly through our tax practitioner hotline, a designated
phone line for fast and accurate information. Also, the Maine Tax Alert is an electronic publication that notifies interested parties of upcoming or recent changes at Maine Revenue Services. In addition, the Business Audit Unit within the Income and Estate Tax Division is responsible for conducting desk and field audits for the various tax types and programs administered by the division. I look forward to working with you this year and will be pleased to respond to any questions you may have at this time.
Are there any questions, Ms. Papadoc, from members of the committee?
Yes.
Terry?
Thank you so much. Thank you, Ms. Papadoc. I appreciate your presentation. Always, I feel like I always have a question for you. Can you maybe touch base a little bit about the fraud part of your division, and if you have had any contact or discussions with the Department of Labor having to do with the stolen identifications of multiple people during the unemployment, sort of at the height of the unemployment part of the pandemic. So have you already had that discussion? And if no, or if so, what's the course of action, I guess?
Thank you. Sorry for the lighting. It goes out after a while without activity. So yes, the fraudulent activities. And when we do speak about tax fraud, we're not talking about people who make errors or even grave errors. We're talking about actual fraudulent activity, the identity theft. And yes, we have had some contact with Department of Labor. We have received information as far as different categories. There's some known fraud and there are various categories. So we are working with Department of Labor, and I think I'll just hold it at that for right now.
Sure, that's fine. That's great. I appreciate that it's a discussion that you guys have already been having. Thanks very much.
Thank you.
I'd just like to follow up on that a little bit. I just was curious with the increased number of people that Mr. Gerard talked about that are filing electronically. Have you noticed an increase in fraudulent returns being filed, on behalf of other people through identity theft, or has that kind of been consistently the same percentage roughly over the years, even though the number of filers filing electronically has increased?
That's a great question. We have had small amounts of fraud in the past. However, with the advent of technology and that shield of anonymity, we have seen big pockets of tax fraud. And so it doesn't all come in as a flow. It will have peaks and valleys and these folks pay attention to goings on in the world and seize those opportunities to file with us.
So as the percentage of people that are filing electronically has increased, so has the fraud as well?
I would say to a certain degree, where we typically have a 2.5% to 3% increase in filers each year, both electronic and non-electronic, but mostly electronic. Yet, again, fluctuating. We've had some years that was incredible fraud, and then we had one year that of late that was a little bit quieter year. And so we just always have to be ever vigilant and plan for these things. So unfortunately, I don't think we can set a set trend because it varies.
Okay. I just had one other additional question that was brought up with the commissioner at the beginning of our orientations about people that are unemployed and the fact that unemployment benefits are taxable income, and that it sounded like from her presentation that people may not be aware of that. So is it correct that when people get unemployment benefits, that the income taxes are not taken out of the benefits before they get them, that they have to pay that at the end of the year or something, and may not be aware of that?
Through conversations with Department of Labor representatives, We have been in conversation as far as the taxability and the awareness of taxability of unemployment benefits. And they have expressed, and I've seen on their website where there's information about taxation of just mostly the blanket statement of unemployment income is taxable. And also they were, I've not gone through the steps of filling out the application, the electronic application for benefits, but they mentioned that there is a screen area where the applicant needs to make an effort. They need to make an election, whether they definitely do wish to have withholding or definitely do not wish to have withholding. That's not just for state withholding, that's also for federal withholding. So it's a very aware acknowledgement. And so they make their decision and they proceed on. And so they find it remarkable if somebody is not aware that the benefits they received are taxable. Of course, also these benefits are taxable at the federal level, and we start with the federal adjusted gross income. So those would flow through to the main return.
Okay, so there's a lot of effort, it sounds like, being put into making people aware. So they have to choose, like you said, to have withholding or not. So they all should be aware that they're taxable and had the option to have it taken out before they receive their checks, so that they wouldn't get surprised at the end of the year that they owe a bunch of money to the state.
Hopefully, yes.
Okay, excellent.
Thank you.
Great. I don't have any other questions. Any other members of the committee have additional questions for Ms. Papaduck? Seeing none, thank you for your presentation.
Thank you.
Appreciate it. I guess now we'll go to Julie Method, MRS Director of Sales Tax Division. Is Judy with us?
I am. Good morning. Senator Chipman, Representative Terry, and other distinguished members of the Taxation Committee. My name is Judy Method, and I'm the Director of the Sales Field and Special Tax Division. I was born and raised in Maine. I got a degree in accounting and finance from the University of Southern Maine, and I am a certified Maine assessor. I've been with Maine Revenue Services for 35 years. The first 9 years, I was a revenue agent in Portland, doing compliance audits of businesses and individuals for sales and use tax, withholding taxes and income taxes. And the next 17 years, I was a district tax audit manager over those audit positions, supervising field auditors in 3 district offices throughout the state. Prior to this position, I was the Deputy Director in the Sales, Fuel, and Special Tax Division for 7 years before assuming these duties. So as the title of our division implies, we not only administer sales and use taxes, but a total of 20 different taxes and fees. Jerome talked a little bit about those this morning. I'm going to go into them a little bit more. So in FY20, the Sales, Fuel, and Special Tax Division was responsible for approximately 50% of that $4 billion tax revenue that Jerome spoke about this morning. So this division brings in a lot of the revenue into Maine Revenue Services. So although sales and use taxes and service provider taxes consume the majority of our responsibilities here, we also oversee the administration of excise taxes for gasoline and diesel fuels, with those revenues going to the highway fund, as well as for cigarette and tobacco taxes. We also administer special industry taxes for blueberries, potatoes, milk, and mahogany quahog. We handle taxes for the railroad industry, healthcare providers, and hospitals. Lastly, we manage some programs and fees for various funding for our special funds, and that would be the recycling assistance fee that goes to the Department of Environmental Protection, the prepaid wireless fee that actually goes to the PUC, abandoned bottle deposits, and recently the pesticide fee that goes to the Tick Lab at the University of Maine Cooperative. As a result of those different fees and taxes, we are often in front of other committees in addition to taxation. Those committees include Agriculture, Conservation and Forestry, Health and Human Services, the Environment and Natural Resource Committee, Energy, Utilities and Technology, Marine Resources, and Veterans and Legal Affairs, as well as Transportation. So the sales and fuel tax division here is organized into 4 functional units. We have the taxpayer assistance and office administration unit, the taxpayer account maintenance and system administration unit, the tax policy and outreach unit, and then our audit unit. So the assistance and office administration is responsible for frontline taxpayer assistance, mostly through a phone queue and email. The unit assists taxpayers with filing their returns, corrects any suspended returns. So if a return comes in that has mathematical errors, those returns suspend, and the division would correct those and reach out to the taxpayer. They answer questions as to taxability. So we get many calls from taxpayers who get into a new business and they want to know if what they're doing is subject to sales tax. They implement special projects, send welcome packets and educational information to new registrants. So if you register with the sales tax division, upon registration, you're going to receive a packet that includes your resale certificate, your retailer, if you qualify for one, your retailer certificate, and other information concerning how to I-file, maybe a bulletin that pertains particularly to your industry. So the division is responsible for sending out those welcome packets to new registrants. The taxpayer account maintenance and systems administration unit provides taxpayer account resolution also through the telephone queue and assists taxpayers with past due returns and billing notices. They conduct the review of any credit or refund requests, review bad debt and cost of goods sold claims, and exemption requests. So if you are one of the taxpayers that qualifies, for instance, if you're a commercial fisherman or a commercial forestry or are involved in commercial agriculture, or if you're one of the exempt entities like a church or a school or a hospital, you would apply to this unit for your exemption. They would review your application and provide the exemption certificate. They also process documents and records received from the Department of Motor Vehicles. So when you go to register your car at the Department of Motor Vehicles, if you buy a brand new one, you know that if you haven't paid sales tax to the dealer, or if you buy it casually from your neighbor, you're going to have to pay sales tax when you go to register. That sales tax all flows to this division, and we go through all of those records and reconcile the sales tax that's collected from the different town offices and Department of Motor Vehicles. We also have a tax policy and outreach unit, which has a total of 2 positions in it. They conduct tax law research and analysis, including legislative bill reviews. So when a bill comes before it gets released, we take a look at it to see, if it's going to work for us administratively, if perhaps it's could be better written, or if there could be changes to it, and to work on drafting new legislation. They also revise draft forms and taxpayer guidance documents. We have 36, I think in addition, maybe a little bit more than 36 taxpayer guidance documents on our website for different industries. And so they help in drafting those and revising them when new laws get passed that might affect those. They develop taxpayer outreach programs, and they coordinate the rollout of new laws and policies. So we make sure that if you guys pass out some legislation that's going to affect taxpayers, that we get that information out either through the main tax alert or through our email system or some other outreach program. In addition, they maintain all of our divisional statistics. Our audit unit conducts desk and field audits, and they work on special projects. See, the lights, we're very energy conscious here. The main revenue services, the lights go out if you don't move around enough. So they administer our voluntary disclosure program. That is when, if a taxpayer discovers they have a unpaid liability, they can come forward for a voluntary disclosure program anonymously, and we work with them to collect the back taxes and waive any penalties. There are 29 positions in our audit division, and they're split equally between Portland and Augusta. So there's a total of 52 employees, including myself, that are responsible for 20 different tax types and over $2 billion in revenue. So I think that people here at the sales tax division we're a pretty lean division, and we do a very good job. We provide education and customer service to improve the long-term compliance with the main tax laws. The administration of the taxes involves registering taxpayers. We fulfill stamp orders. So if anybody buys cigarettes, you know that those need to be stamped. Vendors call us and we provide stamps to the vendors. So we fill all of those orders for any vendors throughout the state. We respond to requests for exemption certificates, like I said, for any exempt taxpayers, schools, churches, hospitals, commercial fishing, farming. We review and process refund requests, conduct compliance reviews, review your legislative proposals, and we develop and maintain nearly 36 informational bulletins along with various forms, affidavits, applications, and the website. The division's audit unit performs thorough and fair audits while minimizing the time on site and the length of the time the audit's open. They use technology to maximize the efficiency of the audit process and to reduce the burden on taxpayers. Many years ago, I worked for the audit division and used to go out and you'd sit down at a conference table or maybe in someone's basement with a big banker's box of records, and you'd have to go through them. So it involved a lot of time on site at a taxpayer. Now most of our work is done electronically. Taxpayers port their information to us through a secure website, and most of the work is done in our offices. So it really minimizes the time that we need to be in a taxpayer's place of business, and they're very appreciative of that. I encourage you to review the sales tax division section of our website. We have a lot of information out there, and I've been told that we're going to be able to get some information together to give to Julie. So I'll give you some statistics and a copy of our reference guide, which is basically an overview of the sales and use tax law as well as service provider in layman's terms. It's very helpful. We give them out at our tax symposiums, and people are very appreciative of them. I look forward to working with you all this year and welcome any questions you might have at this time.
Are there any questions from members of the committee? Yes, Representative Sachs.
Good morning. I just, with begging indulgence, would like to give a shout out to the great customer service and constituent services of Judy and her crew. I had a constituent who called me and I didn't know who to call, so I called Judy around a sales tax question. And it of course was causing our constituent, it was a little bit complicated, and her straightforward few minutes got it figured out and was just so kind and helpful. So do not hesitate to call them because they were terrific. So thank you, Judy, for the work that you did. You really set their minds at ease and put them on the right path, which was what all they needed. So thank you.
Terrific. Yeah.
Excellent. Any other questions or comments from members of the committee? Seeing none, excellent. Thank you for your presentation. Much appreciated. So we'll now hear from Peter Lacey, the Maine Revenue Services Director of Property Tax Division. Is Peter with us?
Yes, thank you. Senator Chipman, Representative Terry, members of the Taxation Committee, good morning. As said, my name is Peter Lacey, and I'm the Director of the Property Tax Division here at Maine Revenue Services. Before I get into an overview of the Property Tax Division, I'll give you a little background on myself. I was born and educated here in Maine. I have a degree in economics from the University of Southern Maine, as well as a law degree from the University of Maine School of Law, and I am a licensed attorney here in the state. I started with Maine Revenue back in 2008, and like Judy, I was a revenue agent with the Sales Tax Division, conducting field audits of businesses throughout the state. I've been in my current role with the Property Tax Division for almost a year now. Prior to that, I served 6 years in Maine Revenue Services Office of General Counsel, most recently as Deputy General Counsel. In that role, I provided legal advice and other guidance to the different divisions within the agency, including the Property Tax Division. So the Property Tax Division is divided into 3 sections with 3 distinct responsibilities. There's the State Valuation section, the Unorganized Territory section, and the Municipal Services section. The responsibilities of our staff shift seasonally between the different sections. And while the Property Tax Division is the smallest in terms of staff of the divisions at Maine Revenue, we play a vital role in how millions of tax dollars are distributed throughout the state, as I'll explain. So first, the State Valuation section. So the primary function of the State Valuation section is to establish what we call the equalized value of all taxable property in the state on an annual basis. So as Jerome mentioned, as you may be aware, property taxes are largely administered at the municipal level, and your local assessor is responsible for determining the values for the different properties in the town. Now, depending on the real estate market and how long it's been since the town has conducted a revaluation, the assessed values in a given town may be higher or lower than the actual market values for those properties. So every year, our division compiles what are known as sales ratio studies for every municipality in the state. And what those do is analyze recent real estate sales to determine the ratio between what the town's assessing at, the assessed values of the properties, and the actual market values of the properties in that municipality. This allows us to determine the full equalized value of all the taxable property across the state, which puts all municipalities at the same level, i.e. market value. And these resulting equalized values are then used by us, by the property tax division, and by other state agencies as a basis for distributing tax dollars. So this includes calculation of municipal reimbursements, which is one of the tasks we do. It also includes allocation of state education funding to the different municipalities. State revenue sharing to the municipalities is calculated using these values, and the apportionment of county taxes. So next we have the unorganized territory section. So the unorganized territory, what we call the UT, consists of all the areas in the state that are not located in a municipality. Geographically, it's a very large area, around 9 million acres, based largely in the northern and western parts of the state. But it has a small population, around 9,000 year-round residents. So it's kind of a medium-sized town. So because the UT has no municipal government, services are provided by a variety of state agencies and by the county government. The legislature, the legislature, serve as the local governing body for the unorganized territory, reviewing and approving the UT budget every year. There is a UT fiscal administrator who's located in the Department of Audit, who administers the budget for the UT. And then our division serves as the local assessor for the UT. So we perform all of the functions that your municipal assessor does, but for the UT. So that includes, determining property values, issuing property tax bills, hearing property tax appeals, etc. Part of those responsibilities, we have staff appraisers who complete site appraisals of properties across the UT on a rotating basis. We also designate agents, typically municipal officials, who are scattered across the state and who collect excise taxes for the UT. Finally, the municipal services section. So as the name implies, the municipal services section provides a range of services to the different municipalities across the state. This includes administration of state reimbursements to municipalities for programs such as the homestead exemption, business equipment tax exemption. The municipal services section is also responsible for administering a series of statewide programs, including telecommunications excise tax, commercial forestry excise tax, real estate transfer tax, and a series of others. And finally, municipal services section is tasked with the training and certification of all municipal assessors in the state. So in order to serve as an assessor in a municipality, you have to be certified by Maine Revenue. Our certification program includes administration of the Certified Maine Assessor exam, and also the hosting of ongoing trainings throughout the year for local assessors, including most notably the Maine Property Tax Institute and the Maine Property Tax School. Our municipal services section, as well as staff in the other sections, also generally just serve as a daily resource for individuals, businesses, municipal officials, assessors, for really any and all questions related to property tax and to the other programs that we administer. So that's a very quick, dirty overview of the property tax division. I will forward along some links to the pages on our website that cover the various property tax relief programs, both those available through us and those available through the municipalities. as well as the different categories of property tax exemptions. They found that exemptions and relief programs tend to be the two areas we get the most questions about, both from legislators and from taxpayers. And you know, our website has a wealth of information and guidance documents on the different options. So I appreciate your time. I look forward to working with you in this session. Thank you.
Excellent. Thank you, Mr. Lacy. Is there any questions from members of the committee? Representative Terry?
Thank you, Mr. Chair. Thank you, Mr. Lacy, very much, and welcome to the Tax Committee.
Thank you very much.
So I'm wondering if the pandemic has sort of held anybody back in your department as far as assessment goes. I know they have to go, the assessors have to go out into the field quite often, and I'm wondering if that's made any difference for you in your division.
So obviously we have had to kind of scale back our in-person kind of visits. We tend to visit municipalities when we're doing state valuation, and so we've had to do a lot of that more remotely, which luckily for the most part we've been able to do that. I mean, we were able to get state valuation completed on time this year despite the kind of limitations. We have had our appraisers have been going out on more of a limited basis. They tend to be out in the woods in the UT, so it's not quite as big a concern. But we have definitely had to kind of scale back and adjust how we normally have done things. And I would just say that the staff has been great, as have the municipalities, at kind of adjusting to the changes and still being able to get the work that we need to get accomplished. So.
Awesome. That's great. Thank you very much.
Any additional questions from members of the committee? I've got one question. Mr. Lacy, you mentioned at the beginning of your presentation about cities and towns having to do assessment every so often, so everything's assessed equally and fairly for market value. How often does that need to happen, and what happens if a municipality is behind, you know, in terms of when they're supposed to assess? I know, for instance, the city of Portland, I think, is 3 or maybe 4 or 5 years behind implementing the assessment they were supposed to do, and it's been delayed again for the pandemic. And so what sort of happens in that situation? Are they required to assess every 10 years or so? And if they're behind, sort of what can be done about that?
Yeah, so towns are required to do one at minimum every 10 years, but they're also required to keep that ratio that I discussed, the assessment ratio, up above a certain level. So depending on how the real estate market is going, they may have to do it considerably more often than every 10 years. So the real estate market, particularly in southern Maine, but in many parts of the state, has been very active, not just because of the pandemic, but in prior years. So you've seen revaluations have to happen more often. So when we calculate the municipal reimbursements, those are based on the ratios. So or if you continue to drop down, there's going to be a reduction in your reimbursements from the state for certain things. So, but most of the towns have been doing a pretty good job of doing adjustments to try and keep up with the market. So,
okay. So I mean, I know that the city of Portland, like I mentioned, is behind, and so I believe they were supposed to implement the current revaluation that they did some work on, you know, maybe 4 years ago or something. So does that mean that if they implemented it today, which they haven't, that they'd have to do another one in 6 years or less? Or would the clock for the 10 years start all over again from the time they implement?
Well, the 10 years I believe, is from the implementation, but particularly for Portland, my guess is they're going to have to do one more often than 10 years just because of how quick the market is appreciating.
Right. Yeah, because I just know, like, with the homestead exemption, it's supposed to be 25,000 of value exempt, and I think for Portland it's like 17,000 because we're behind and the market's gone way up in terms of values and sales prices and things like that. So,
Yep.
Okay, well, seeing no other additional questions from members of the committee, appreciate your presentation to us today. Thank you for that. So we'll now.
Thank you for your time.
You're welcome. So we'll now hear from Bruce Livingston, who's the taxpayer advocate. Bruce, with us?
Yes. You hear me okay?
Yes.
Good. Thank you. Good morning, Senator Chipman, Representative Terry, members of the Taxation Committee. I'm Bruce Livingston. I'm the taxpayer advocate with Maine Revenue Services. I'm not on camera today, and that might be a good thing. I'm a longtime Mainer, born in Presque Isle, went through the 4th grade there, then to South Portland, live in the Augusta area now, and I have a law degree from the University of Maine. I note that 6 of the members of the committee were on the tax committee in the 129th legislature, so welcome back. I have a brief description of the taxpayer advocate position that I will send over to the State House for you, along with a copy of the Taxpayer Bill of Rights. It's entitled Your Rights as a Taxpayer. It's a little pamphlet that goes out with all the notices that are sent out by Maine Revenue. If anyone is interested, I can also send over copies of my 2020 report. That's an annual report that I put out. The taxpayer advocate position was created in 1995 by Governor Angus King and the state tax assessor. I've been the taxpayer advocate since July of 1997. Legislative changes by the 125th legislature in 2011 was effective July 1st, 2012, resulted in the taxpayer advocate position coming under the DAFS commissioner. The purpose of the taxpayer advocate is to assist taxpayers who disagree with some action by Maine Revenue Services, usually an assessment of taxes that are due or the collection of the amount due. Taxpayers that feel lost in the system, oftentimes taxpayers are looking for information and they don't know who to call, so they call me. It's often income tax or property tax. Taxpayers get in touch with me because they don't understand Maine tax law as it applies to their individual tax situation. They may feel that no one is listening to them, that they feel misunderstood and ignored. In a lot of cases, I'm sort of a jack of all trades. I listen to what the taxpayer has to say, refer them to the right Maine Revenue Services department, whether it's income tax or compliance or property tax. Back when the federal stimulus came out in the fall, I found I was getting an awful lot of calls every week from people who thought I was a federal taxpayer advocate. And every once in a while I would ask them where they were getting my number, and they were just basically misreading information that they Googled. What I do with those, and I'm getting a lot of them now with the additional stimulus package, I refer taxpayers that call and explain that they've got the wrong taxpayer advocate, and I refer them to the taxpayer advocate for the federal government that's in Augusta. Cases reach me in various different ways. Taxpayers call directly, and I get some of those every day, or the representatives. Oftentimes, the governor's constituent services staff fields inquiries from taxpayers and are referred to DAFS and then to me. Get referred from legislators or members of legislative staff, staff from Maine's congressional delegation, and Maine Revenue Services staff, either the assessor or collection staff, income tax, sales and use division, or property tax, and sometimes directly from the commissioner's office over at DAFS. Taxpayers often ask, who else can I talk to? And in a lot of cases, I'm the who else. They're sort of going up the chain of command, I guess, from getting information from perhaps compliance. They don't like the answer, so they want to talk to somebody else, and that's me. Also, for some of those who remember him and his afternoon radio program, I'm sometimes Paul Harvey with the rest of the story. I found that taxpayers have a tendency to relate only a portion of their entire story about their tax problem when they're describing it to the governor's office of constituent services or the state senate or representative. I know you folks have a lot to do, and I've been asked to be brief, but if you would like, I can go into a few of the things that I do as taxpayer advocate. Other than that, thank you. And if you have any questions, I'll be happy to answer them.
Excellent. Thank you, Mr. Livingston. Any questions from members of the committee?
You're welcome.
Seeing no questions, before we continue, I just wanted to make sure we get a chance to introduce a couple of members that have joined us. I believe Representative Collins is with us. Would you like to introduce yourself?
Yes, good morning. I'm Representative Benjamin Collins. I represent House District 42, which is a part of Portland, and it's a pleasure for me to be and participating in this meeting with all of you today. Thank you very much for all the staff presentations, very informative, and I look forward to working with everyone involved with this committee. Thank you.
Okay, great. And Representative Gramlich, would you like to introduce yourself?
Thank you, Senator. Yes, I am Representative Lori Gramlich, and I represent House District 13, which is the lovely seaside community of Old Orchard Beach. Pardon my tardiness. I'm managing some competing priorities on my end, and I'm happy to be here and looking forward to working with all of you. Thank you very much.
Great. Okay, I don't believe there's any other members that have joined us since we started. So we will now go to John Sagasser, Maine Revenue Services Tax Policy Council. Is John with us?
Yes. So I was going to start off, Senator Chipman, if I could, and talking about the Office of Tax Policy. And then John and Daniel D'Alessandro are going to introduce themselves because they will be in front of the committee quite a bit this session, and just wanted all the other committee members to see them, and so they'll be recognized.
Sure. Okay. Yeah. Dr. Allen, thank you. Why don't you present to us? Appreciate it.
All righty. Good morning, Senator Chipman, Representative Terry, members of the committee. Before I start, I've come to realize that the way I have my office set up, I have my laptop to my left with the camera, and I have a big monitor in front of me because I work on spreadsheets all day. So it may seem like I'm kind of off to the side or looking someplace else, but I'm really looking at the monitor because I can see everybody's faces a lot easier on that than on this small laptop. So my name is Michael Allen. I'm the Associate Commissioner for Tax Policy in Maine Revenue Services, and also part of the Department of Administrative and Financial Services. Just quick background on me. I have a BA in economics from the University of Vermont and a PhD in economics from Boston College. After I finished my work at Boston College, I worked for 6 years in the U.S. Treasury's Office of Tax Analysis, forecasting federal tax revenues and estimating the impact of proposed legislation that either the president or Congress was considering. For the last 24 years, I've been in Maine Revenue Services, first as the Director of Econometric Research, which was essentially doing the same thing for Maine that I had done at the federal level, forecasting revenues and estimating the impact of proposed legislation. And for the last 9 years, I've been the Associate Commissioner for Tax Policy. I'm going to share a screen. Hopefully that'll come up. Here we go. So as the commissioner mentioned this morning, as you can see from the org chart of the department, the commissioner, as she indicated, it has been a long 10 months, and you can see why when you consider all of the different areas that the department covers. But in here is Jerome Gerard, the state tax assessor who you heard from, and myself and our direct reports to the commissioner. This is the org chart for Maine Revenue Services. And you can see off to the left here is the Office of Tax Policy. And we have currently 6 positions. 2 of them are vacant. We have a vacant staff attorney, and really more importantly at this stage, we have a vacant economist position that has been vacant for about a year. At the time that we were about to go out and hire to fill that position, that's when COVID started, and it's just been too difficult to try and go out and hire somebody with all of us working remotely. David Gunter, who is our tax economist, has quite a bit of work on his shoulders. He will be the person that has the primary responsibility for putting an estimate on any proposed legislation that comes before the committee. He's been working extremely hard over the summer, as the commissioner indicated, evaluating all the federal tax proposals, what the impact of conforming to those proposals would be. And that's all the information that we've used in briefing the commissioner and the governor on those federal impacts. So David has a wealth of information. He's been with us for about 12 years. He's a key cog in our process. I'm going to now have John and Daniel introduce themselves, because they will be in front of the committee on many occasions, and I'd like to have you be able to recognize them.
Is John Sagasser with us?
Yes.
Right.
Can you all hear me?
Yes.
Good morning. I'm John Sagasser, Tax Policy Counsel at the Office of Tax Policy at Maine Revenue. I've been in that position for about 9 years now. I started work at Maine. I've been at Maine Revenue for about 25 years. I'm a member of the Maine Bar and a graduate of Brown University and Boston College Law School. I practiced law in Boston from 87 to 1994, and then started at Maine Revenue in January 1995. First as counsel in what was the Administrative Appeals Unit, the Appeals Division at Maine Revenue. Later served as director of that division. I served as general counsel at Maine Revenue for 7 years after that. And then in December of 2011, moved over to Office of Tax Policy in a counsel role. As tax policy counsel, I provide legal, tax policy, and project management advice and assistance on all tax type matters with respect to legislation, rulemaking, advisory rulings, interagency tax matters. I work regularly with, consult with, and act as liaison to the Office of Attorney General on tax policy matters, and am involved in the very interesting work of tax policy. I look forward to appearing before you and working with you this coming session.
Great, thank you. Is there any questions from members of the committee for Mr. Sagasser? Seeing none, thank you for your presentation today. So now we'll hear from Daniel D'Alessandro, who's the Maine Revenue Services staff attorney. Welcome, Mr. D'Alessandro.
Hi, thank you. Hello, Senator Chipman and Representative Terry and other members of the Taxation Committee. My name is Daniel D'Alessandro, and I'm an attorney in the Office of Tax Policy. I've been here for almost 5 years, and before that I worked with the Internal Revenue Services, and I got my law degree from the University of Maine. I work with John on legal issues facing the Office of Tax Policy and also Maine Revenue Services in general. A lot of my work is with legislation that either comes from the administration or is proposed by legislators. And you'll see me when our department bills are heard and when there are any other legislative bills that have particular legal or constitutional issues.
Any questions from Mr. D'Alessandro? Seeing none, thank you for being here today and introducing yourself. Appreciate it. So I guess that completes our agenda, at least in terms of the orientation today. Dr. Allen, did you have more for us?
Yes, I do.
Okay.
Sorry. Quite a bit more, actually.
Oh, great.
So let me go back from the beginning. Okay. So just to quickly explain the Office of Tax Policy, as I mentioned, we have 6 positions, 2 economists, 3 staff attorneys when fully staffed up. We have legislative and policy oversight supervision of the directors and senior staff of the Income, Sales, and Property Tax Division. So just to go back to that org chart, and you see the dotted lines here between the division directors that you heard from earlier and the Office of Tax Policy. Clearly, as Peter and Judy and Heather all discussed with you, their primary responsibilities is to administer those various taxes. But they also, as they described to you, review any legislation that will be coming before the committee to make sure that the language is clear to them. If they think the language is going to be clear to the taxpayer, they may, and they'll also evaluate whether passage of a particular bill would require additional personnel or other costs on their specific division. So they will be extremely helpful, as you've already seen, in looking at that legislation and helping you craft it in a way that it achieves the objectives that the committee is trying to achieve. OTP provides professional, economic, and legal analysis on tax policy issues. We advise the Commissioner Figueroa, other departments, the governor's office, and of course, the Taxation Committee, and to the extent that the AFA Committee gets involved in tax issues, we also help there. We produce fiscal and economic analysis reports. We provide advice and briefings on current economic developments, and we coordinate interdepartmental tax-related policy, primarily with the Department of Economic and Community Development, while other departments may there may be a tax bill that is going to impact another department. Usually it's the Department of Economic and Community Development that you'll see in front of the committee as well, and we work very closely with them. So our responsibilities are quite extensive. The Revenue Forecasting Committee, which I'll talk a little bit more about in a minute, because the Revenue Forecasting Committee plays an important role in the information that we'll be providing to the Tax Committee throughout the session on bills. The Associate Commissioner for Tax Policy is a member, statutory member of the Revenue Forecasting Committee. The Director of the Office of Fiscal and Program Review is also a member, statutory member of the Revenue Forecasting Committee. So it's joint membership between the executive branch and the legislative branch. We provide revenue estimates to the Office of Fiscal and Program Review for any legislation that comes before this committee. So as you well know, the official fiscal note that will be attached to any tax legislation comes out of the Office of Fiscal and Program Review. But we will usually provide the initial estimate and then work with the Office of Fiscal and Program Review so that they have all the information they need to put the official fiscal note on. And we've worked for quite a long time with Julie and Suzanne and Chris Nolan and Mark Sear on that process. And I think we have a very good working relationship. We provide distribution tables when the committee is interested in knowing not only the fiscal impact of a bill, but who that particular bill is going to be affecting. Is it going to be lower income people, upper income people, elderly versus non-elderly, homeowners, renters, those type of things. And I'll talk a little bit more about distribution tables in a little bit. Basic data dissemination. So if somebody just has a question about, well, how many taxpayers took that credit last year and what was the dollar amount of that? What were restaurant sales in Bangor last year? We can provide that information to you. John and Daniel, as they pointed out, they do a lot of legal research and analysis to make sure that any bill that comes before the committee, any bill that the governor is proposing, reaches legal muster and isn't unconstitutional either at the federal or state level, or it has some sort of other legal implications to it. And we do general economic analysis, although for the last 2 or 3 years, the state economist, the Office of the State Economist, is now a part of the Department of Administrative and Financial Services. And that's a resource that we utilize quite a bit. And from time to time, you may ask, or you may see the state economist in front of the Taxation Committee if there's general economic information that the committee is interested in. All right, we provide a number of reports. So the revenue forecasting report, we work with the Office of Fiscal and Program Review to put that report out. Usually the Taxation Committee gets a hard copy of the latest revenue forecasting report. The last report came out December 1st as required by law. It's all on the OFPR website. That is the home of the Revenue Forecasting Committee. And all of the information that went into developing that revenue forecast for the general fund, highway fund, other special revenue funds is all included on that site. Each month, in fact, you may get the December's today or tomorrow, the commissioner will issue a monthly revenue report describing how revenues performed relative to budget in the last month, how we performed compared to a year ago, where we're seeing good growth, weak growth, any issues that we think the governor and the legislature should be aware of that occurred in the previous month, what may be coming up in the next month that we think people should be watching for. It usually includes at the very end some sort of general economic commentary on both the national economy and the state and regional economy. I would highly recommend, the Taxation Committee is on the distribution report for those monthly revenue reports. I would highly recommend reading them carefully because I think you learn about the state's tax system by reading the monthly revenue report and seeing why sales tax are doing so well in recent months, when in a recession you wouldn't necessarily think they should be doing so well. But this has been the term, I heard the commissioner use it a couple of times. You're going to hear it quite a bit throughout this session, the word unprecedented. This has been an unprecedented period because of the pandemic, and it's an unprecedented recession, particularly because of the strong federal response that the commissioner alluded to. And we are seeing revenues that you would just normally not see in as deep a recession as the nation and the state has faced. As the commissioner pointed out, we have a tax expenditure report that will be coming to you on February 15th. It's due every 2 years. That is the so-called red book that people often refer to it because it has a red cover that we will continue to have as a red cover. And as the commissioner pointed out, I am presenting a presentation to the AFA committee later today on the tax expenditure report. Included in the tax expenditure report is a tax incidence report that we're also required to produce every 2 years. The tax incidence report is like a big distribution table. It's our estimate of how the state and local tax system is distributed across Maine households by income category. So again, trying to get an understanding of each of the different major taxes, income, sales, property, who's bearing the burden of that tax, how much of the tax is being exported to non-residents, that sort of information. We part of the biennial stress test report that is on the state economist's website. The stress test report is due October 1st of every even-numbered year. That's a joint report from the Consensus Economic Forecasting Committee and the Revenue Forecasting Committee. And the purpose of that report is to perform a stress test of the state's revenues. This was an unusual one this past year because we were in the middle of a recession, but the objective of the stress test report is in good times to provide information to the governor and the legislature on how we think the state's revenue system will perform in the next moderate recession or the next severe recession, so that as the biennial budget process is beginning, that information is available to the governor and the legislature. It also, the other piece of information that goes along with that report is to look at the budget stabilization fund and determine or at least acknowledge whether there is enough in the budget stabilization fund to get the state through a moderate recession or a severe recession, and to determine if the maximum amount that's in law that can be in the budget stabilization fund may need to be reviewed by the legislature. We produce a monthly taxable sales report. That is part of the commissioner's monthly revenue report. And that breaks taxable sales down by various categories like building supply sales, auto transportation sales, restaurant sales, so that the governor and the legislature can understand what areas of the tax system is performing strong, which ones are weak, why that may be. And again, you can see how it's changed year over year, over the course of the year, et cetera. All right, I'm just going to stop here for a second and just talk a minute about how we plan to approach this session with you as far as communications and interaction with the committee. This is an unusual session, to say the least. Just the fact that we're doing all this remotely, we're not all in the same room as usual. And so certainly members of the committee that have been on the committee in the past, are used to a certain level of interaction with MRS and OTP in the room. And this year, I think you'll see a little different interaction just because we are all remote. And so one change that we think you'll see this year is that we will probably be providing testimony at more of the public hearings and on more of the bills than we have in the past. Traditionally, OTP or the administration doesn't testify at a public hearing unless the governor has a strong feeling about a bill, or we feel like there's just an issue with the bill that we think we need to get in front of the committee as right up front. So in a lot of cases, we would testify neither for nor against. This session, just because we are remote and maybe the communications are going to be a little more difficult, I think you'll see us testify on most bills. Again, I suspect it'll be neither for nor against, but I think that will provide the opportunity for us to get in front of the committee as early as possible any issues that we may have with not issues with the policy or the bill itself, but maybe with the language of the bill. So as Judy and Heather and Peter all pointed out, they're there to help make sure that whatever the committee is trying to achieve, the language is clear to MRS and the language is clear to taxpayers, so that that reduces any sort of compliance burden. And I think that's what you're going to see most likely in a lot of these public hearings, us just coming before you saying, we would recommend maybe changing the wording a little bit to make it clearer, or we think maybe this belongs in a different section of Title 36 or that type of thing. there will be bills where we will be testifying in support or against. But again, I don't think that will be certainly a majority of the case. The division directors will be available just as they always have, but again, it's going to be remotely, I assume, like we are dealing with today. And I think there could be some awkward moments because usually we're all in the room with you and a question is coming from the committee and we usually have a moment to confer among ourselves about who the best person is to go up and respond to the committee question. Obviously, we're all working remote from one another, so we're not going to have that opportunity. So I think it just may require a little bit of patience to allow us to sort of signal to each other, or somebody will jump in and say, well, Judy, maybe you're the best person to answer that, or someone else will answer the question. As the commissioner pointed out, we're all, many of us are working remotely. Some people are in the office. This is going to be a difficult income tax filing season. Certainly sales tax and property tax have their challenges with administering the law during a pandemic like this. And so in order for us to serve you best, in order for us to be able to get information in front of you in a timely manner, and the information that you require to make a decision, we will be asking from time to time for the chairs to prioritize the work. It's not going to be, you always have a large number of bills in front of the committee, and it's just not going to be possible for us to put all of the time into every bill to make sure we get the information that you need. So we would appreciate that. If possible, we'd like the information flow to go through the chairs and through Julie. So if you have a question, if you would like us to think about maybe an amendment to a bill, if you can work through the chairs or through Julie, that would be the easiest way. Also, if you need information on a bill, you have some sort of detailed question, we would ask that you go to Anya, because Anya will know what our workload is and can probably provide the information to you right up front. But if she can't, she'll know what our workload is like and how much time that may take to get that information back to you and make sure that we're all working on a schedule that's best for you and for us. On questions about bills, we would prefer that you not call the division directors directly. Again, that you'd work through Anya or through Julie. As the directors all pointed out, their main responsibilities is to administer those various tax regimes, and that's their main responsibility. And again, they have busy days, and they're certainly going to get involved with answering any question, but we would prefer you not call them directly on any policy issues or bill issues. Having said that, and I think it was Representative Sachs earlier when Judy was on, talking about how there was a constituent question on sales tax and how helpful Judy in the sales tax division was in answering it. That is exactly the process for those types of questions, constituent questions about a taxpayer trying to understand their responsibilities, or maybe they've been audited or they've received a notice. I'm not the person to go to for that. I don't get involved with taxpayer issues. I think the best person the best process there is to go either to the division director or to Bruce Livingston, the taxpayer advocate, would clearly be another person if you have a constituent with a tax issue with MRS. All right, and again, we're open to suggestions on how to improve the process as the session goes on. If there's something we're doing that you don't like, please raise it with Anya or myself. We're here to help serve you as best we can to make sure that you can do the job you've been tasked with doing. All right, the last part of my presentation is just to talk about the revenue forecasting process and how we estimate the revenue impact of the legislation that's going to be coming before the committee, because unfortunately, the estimate of, or the fiscal note that's going to be attached to these bills oftentimes become an issue of concern and confusion. And I think if the committee knows upfront how that process works, that may help relieve you of any concern or confusion about the estimates that you'll see coming before you. But again, we are always open to answering questions about how the fiscal note was done or the revenue estimate was done. And we're always open to going back and reviewing them with you or anybody else that you'd like us to do that with. So the terminology you're going to hear throughout the session, you're going to hear about the revenue forecast, and then you're going to hear about a revenue estimate. And the revenue forecast, also known as the baseline forecast, that is the forecast that is produced by the Revenue Forecasting Committee traditionally twice a year, that uses the economic forecast that's provided by the Consensus Economic Forecasting Commission. And the key assumptions behind that revenue forecast is, and I'm going to go into this a little bit in more detail, but the key assumption behind that forecast that it's based on current law, current federal law, current state law. We don't, in developing the revenue forecast, we don't try to guess what the legislature is going to do. It's not based on the governor's biennial budget submission. It is based on current law at the time the forecast was done. So the last forecast was completed on December 1st. As the commissioner pointed out this morning, the Consolidated Appropriations Act of 2021 at the federal level wasn't passed and signed by the president until the end of December. So the current revenue forecast did not assume passage of that second stimulus package or any of the other provisions that were in that. And that's going to become an important part of the discussion on Monday when the commissioner presents the supplemental budgets, and in particular, the conformity pieces that are in the supplemental budget, because that's going to be an important factor in why certain provisions have the fiscal note that they do. The revenue estimate is the estimated change in the baseline forecast of a proposed change in state tax laws. And that is the revenue estimate that we provide is the basis of the OFPR fiscal note that they will provide to the legislature. The revenue forecast is by statute. There are 2 revenue forecasts every year. This year was a little bit different. It was unique. It was unprecedented because of the pandemic. There was a third forecast that was done in 2020. We did the required March 1st forecast and the required December 1st forecast. But we also did a forecast on August 1st to try and give the governor and the legislature an update about, midway through the calendar year on what we thought the impact of the pandemic was having on state revenues. This year, in an odd numbered year when the legislature is here for a long session, the spring forecast is May 1st. And the reason for that is because you guys are going to be here until June normally. And it's also to allow us to see what those April 15th filings look like, so that we can provide as accurate a forecast as we can as the legislature completes the biennial budget process. You can see the membership. It has 2 members of legislative staff, the Director of Office and Fiscal Program Review, and another nonpartisan member of legislative staff. At the moment, that's Mark Sear in the Office of Fiscal and Program Review. It also has an independent member, Jim Brees, who's an economist at the University of Maine, that the Chancellor chooses, and then the Associate Commissioner for Tax Policy, the State Budget Officer, and the State Economist on the Revenue Forecasting Committee. They're all public meetings, but the committee can go into executive session if a member of the committee has a question that would require the divulging confidential taxpayer information. It doesn't happen very often, but from time to time, a member of the RFC, may say, for me to make a decision on this, I really need to understand exactly the taxpayer or taxpayers that we're talking about that are driving this recommendation. And so we will go into executive session, but that tends to be rare. The key to our revenue forecast, which has really put us at the forefront, the state of Maine at the forefront of developing revenue forecasts, and the bond rating agencies always highlight this fact when they provide their bond ratings each spring, is that the revenue forecast has to use the economic forecast that's provided by the Consensus Economic Forecasting Commission. And the important part of that is that the Consensus Economic Forecasting Commission is a completely independent group. They cannot be an employee of the executive branch, the legislative branch, or the judicial branch. They all are from outside of state government, mostly in academia or private practice. The governor appoints 2 members to the commission. The speaker recommends for appointment by the governor, one of the members, and the Senate president recommends to the governor for appointment. And then those 4 appointed members choose the 5th member of the CFC. So it's completely independent, so that everybody knows that the economic forecast isn't being driven by anybody's agenda or political, trying to make the budget, the revenue forecast look rosier or worse than it is. Many states have gone on to try and copy that approach. This next section is important. I've already talked a little bit about it, but it really is key to understanding many of the revenue estimates and fiscal notes that we will provide to you. The assumption, again, is that on December 1st, when we issued that last revenue forecast, that forecast incorporates all the information that was available as of that date. It's based on the current state law as of that date, current federal law as of that date, any court cases that have come down at either the federal or the state level as of that date, any other regulations. All of that information as of December 1st is assumed to be incorporated into that baseline forecast. And again, I'll talk a little bit more about this in a second when I talk about why certain fiscal notes look the way they are, but this is going to be very important on Monday when you review the conformity bill, because we've already started getting questions about this. And as the commissioner pointed out, the response by the federal government to the pandemic and the CARES Act and the recent Consolidated Appropriations Act not only is the size and the speed of response by the federal government unique, but many of the programs that were part of those bills, the one that comes to mind that we're going to be talking about quite a bit, I'm sure, on Monday is the Paycheck Protection Program. That was a pretty unique program. It in some ways doesn't directly affect taxes, but there are aspects of it that have a clear tax impact in the way Congress set it up. And we've really had to think about what the estimate of that is. And we've had numerous conversations about what was in the revenue forecast, what wasn't in the revenue forecast. And we can have certainly more detailed conversation about that on Monday. So, what's our approach to providing estimates for proposed legislation? The approach that we use is consistent with how other states and the federal government provide revenue estimates to Congress or state legislatures. The objective of the methodology is develop a revenue estimate that's as accurate as it can be, that it's timely, and it's consistent given the existing professional economics literature and the state's modeling capabilities. The state, we're lucky that the state has historically provided us with resources to have pretty extensive modeling capabilities. And I mentioned David Gunter before, the tax economist that does much of the state's tax modeling at this point. He's extremely gifted, extremely knowledgeable. We're lucky to have him, and we have a suite of tax models that are really as good as any other states, or even in some cases to the federal government. In many cases, the proposals that come before the committee are pretty straightforward, and we can use our models with very few assumptions involved to provide you with a fiscal note that we have a high degree of certainty in. So, you want to change the sales tax rate, or you want to change the income tax rates and brackets. Those type of things can be done very accurately and quickly. There's going to be other proposals or parts of proposals that come before you that can't be done on the model, or we can start with our model, but they just have enough of a twist to them that we're going to have to supplement the model using outside data to get what we believe to be as accurate estimate as we can. And a lot of times we do have to make a lot of key assumptions. And those assumptions are based on the judgment of the person doing the estimate, their experience with similar proposals, their experience with the state's tax system, and their judgment and review of the underlying economics literature on taxpayer behavior or the impact of those types of proposals. We do have a very good relationship with our colleagues in other states. Usually, if there's a bill before the Maine legislature, it's probably already in existence in another state, or another state has already looked at that proposal and we can deal with them. A lot of times we have states coming to us saying, oh, Maine has this unique exemption or credit. Can you help us? So we work very closely with them. Our approach is that they're developed professionally and without regard to the goal of the proposal or the individual or political party or branch of government that's making the proposal. So I can assure you, I've been here in the state for 24 years, and I always like to say we're equal opportunity annoyers. Every governor that I've worked for, every commissioner, every taxation committee, appropriations committee, every legislature, no one is ever happy with our fiscal notes. But I think it's important that everybody understands it's not, we're doing the best we can with the information we have to provide you with the most accurate information as we can. Our view of this is a good proposal or it's a bad proposal, or, oh, it's that individual that's doing it, or it's that political party, or, we work, well, it's the governor's proposal, so we're going to do a lot of work on that. But if it's coming from the legislature, we're not going to, we take them as they come and we do the best job regardless. We put that all aside. We're always willing to review an estimate to take into account new or additional information. So, we go first. When we come into a work session, we'll have an estimate. It may be a range for the bill that you're working. And, we've done the best we can. Oftentimes at the public hearing or at the work session, somebody that's very knowledgeable in that sector of the economy or in the area that the tax bill is dealing with will come forward and say, oh, we've got this additional information that we think you should really look at. Great. We're more than happy to do that. And we're more than happy to answer questions and explain to you how the estimate was done. We work collaboratively with the attorneys in MRS and the division directors. So again, those dotted lines that you saw on the MRS org chart between the Office of Tax Policy and the divisions, those division directors, they're working that tax every day. They're working with taxpayers every day. They're very helpful in helping us understand what sort of impact a bill will have on MRS's ability to enforce it and the ability of taxpayers to understand and comply with that. And that will be built into our estimate of the revenue impact. And again, there's going to be periods where we're just going to need someone to prioritize our work, primarily the chairs, in consultation with the administration and legislative leadership. I can tell you right up front, one time of the year that's always difficult is when we are preparing for a revenue forecast. So the next revenue forecast is due May 1st. The month of April, we're pretty busy preparing a forecast for the Revenue Forecasting Committee, and it may be difficult for us to meet certain timelines as the Taxation Committee is reviewing bills and looking for revenue numbers from us. I always like to make the comparison to somebody that's to the repair shop for your car. When we're working on the revenue forecast, we've kind of taken the model and open it up. It's kind of like working on an engine to a car, and the engine's kind of all out on the floor of the garage being worked on. You can't just go in and ask the mechanic to use the car. It's kind of the same thing with us. We've kind of gone in and opened up our models to feed in the new data that we've received from the Consensus Economic Forecasting Committee. We're playing with the models to develop the forecast, and it's difficult for us to then try and estimate a bill. Quickly, types of revenue estimates. So this is going to come up during the session. What kind of assumptions do we make in developing these estimates? And there's three types of estimates that can be produced: a static estimate, what we call a microdynamic estimate, and a macrodynamic estimate. A static estimate assumes absolutely no taxpayer behavior. A microdynamic estimate allows for some taxpayer behavior in response to a tax change, but we have to maintain the macro forecast that we received from the Consensus Economic Forecasting Commission. And a macro dynamic estimate allows all of those things to change. You can have taxpayer behavior, and the economic forecast from the CEFC can change. Well, so let me just go through a quick example to kind of explain better what I'm talking about. So an easy one is just think about a cigarette tax increase, excise tax increase. If we did a static estimate, we would assume you increase the excise tax on cigarettes, no change in behavior. The same, we are going to sell the same number of cigarette stamps after the tax increase as we did before. Nobody's going to cross the border into New Hampshire to get their cigarettes at a lower price. Nobody's going to quit smoking. Nobody's going to not start smoking. There's no change in compliance. It's just if we sell 60 million tax stamps a year, we're going to continue to sell 60 million tax stamps a year. We do not do static estimates. So that is not an estimate that we provide. A microdynamic estimate says, yes, we understand that a change in taxes is going to result in some sort of taxpayer behavior of varying degrees. So if there is a 10% increase in the cigarette excise tax, we would expect that there will be some taxpayer behavior, some reduction in cigarette stamp sales. People are going to cut back on how much they consume. People will not start smoking. In recent years, we've had to take into account the prevalence now of vaping. People current cigarette smokers may say, well, cigarettes are now too expensive. I'm going to start vaping instead. Didn't have to deal with that probably about 6-10 years ago. Do now. We know we only border one state, a state without a sales tax and a state that has a slightly lower at the moment excise tax on cigarettes. It's not unusual in around the country for people to cross borders when borders are close by, and there's a big differential between state taxation of cigarettes to cross over. We try to take all of that into account in the estimate that we provide to you. The last type of estimate is what's called a dynamic revenue estimate or a macro dynamic estimate. Probably about 15 years ago or so, these were very popular across the states. And we've had requests in the past to do dynamic revenue estimates, and in conjunction, obviously, with OFPR, who again is the ultimate determiner of the fiscal note. We continue to follow typical revenue estimating conventions of not doing dynamic revenue estimates. And in the case of the cigarette tax example, a dynamic estimate would be not only people's individual behavior changing, but the ability for that tax change to affect the overall economy of Maine. So one of the issues that comes up a lot of times when the legislature is considering a cigarette tax increase of some magnitude is you'll get a lot of small convenience store owners coming into the committee and saying, it's not just somebody saying, I'm not going to buy my cigarettes anymore in Maine, I'm going to go to New Hampshire. If they're buying their cigarettes in New Hampshire, they're also getting their loaf of bread, their gallon of milk. And so it extends beyond that. And I may have to close. You know, we would not take that sort of dynamic impact into account in doing our estimate. A lot of proposals that come before you are designed to attract people to the state. There may be tax increases where people argue, oh, people are going to leave the state. We have to assume the same level of population that's provided to us by the economic forecast. We can't assume the population will go up or go down in developing our estimates. As I said, macro estimates, dynamic estimates have been around for a long time. There have been attempts at the state level to incorporate them into their traditional fiscal notes. California and Massachusetts tried it. They were both in around the early 2000s. They quickly abandoned that approach. Dynamic fiscal notes require a lot of time, a lot of modeling capability. The federal government does do dynamic estimates, but they're usually associated with significant tax policy changes. So the federal tax reform back in 2017, the Joint Committee on Taxation, which is the official scoring arm of Congress for tax issues, they did a dynamic estimate. It's not the ultimate estimate that's used by Congress in making the decisions. It's kind of an additional piece of information. We have done some dynamic estimates at the state level here in Maine. They usually involve the state economist. But again, they've tended to be around major tax reform proposals or significant tax bills that come before the legislature that's going to have hundreds of millions of dollars of impact. And the committee, the legislature has requested that a dynamic estimate be done to provide them with additional information. But most bills that come before you are not going to be of a magnitude that our modeling capabilities could possibly capture the dynamic impacts of. The Maine economy now is a $70 billion economy. A sales tax exemption that has an estimated impact of $1 million. Its impact on that $70 billion economy just can't be that large. If it was, you'd be passing a lot of $1 million tax exemptions to stimulate the Maine economy. Okay, so quickly, just typical issues that are going to come before the committee. I can guarantee you're going to have bills that come before the committee this session that are going to raise these issues, and I just want to get them out on the table now. You're still going to have these questions as the bill is in front of you, and this allows me to be able to remind you of what I'm about to present, which to me is important because it helps give you some confidence that we're not making these things up as we go along. Again, these are long-held approaches to providing estimates to you and what we take into account. So in any estimate we do, sometimes there's a timing element to them. So you may have a sales tax bill in front of you that isn't going to become effective until October 1st. And if the sales tax change is large enough, so just for example, there's a proposal to increase the sales tax from 5.5% to 7%. Fairly large increase in the sales tax. In developing the estimate, we would assume if that change is going to take place, say on October 1st, that gives taxpayers the opportunity to time their purchases. Somebody may say, I'm not going to buy an automobile on October 2nd and pay a 7% sales tax. I'm going to go in July or August and purchase my new automobile because I want to get in under the current 5.5% rate. Or vice versa, if you had a proposal to cut the sales tax, people may defer their purchases until the tax rate is lower. You'll see a lot of this particularly on income tax changes that affect high-income individuals. High-income individuals tend to have the ability to accelerate income or defer income to take advantage of tax changes. So we saw a lot of this at the federal level around tax reform back in 2017, where businesses and individual taxpayers were shifting income either out of 2017 and into 2018 to take advantage of those lower tax rates. In many business cases, they were shifting expenses into 2017 so that they could be deducted at the higher tax rate, corporate tax rate that was in existence in 2017. So we'll try to take that into account in the estimates. Compliance. So this is where we really, again, will rely on the divisions to help us understand, the ability of taxpayers to comply and the ability of Maine Revenue Services to enforce a tax change. Sometimes the division will say, this is just going to be tough for us to enforce. We can see a lot of opportunities for taxpayers to avoid this tax. And we'll take that into account in developing our revenue estimate. This isn't an issue so much anymore because we require transient rental platforms to collect and remit lodging tax on short-term lodging rentals. But when that first was enacted by the legislature and you didn't have these transient rental platforms, it was just individuals renting their cottages or rooms in their house out. We knew there was a lot of activity going on, but we also realized that was going to be hard for MRS to enforce and make sure taxpayers were complying with it. So that certainly went into the estimate that we provided to the legislature. Bills, you'll oftentimes get bills. I haven't seen one yet, but I'm sure you're going to have a bill where somebody comes in and says, MRS audited me and they're saying I should have been collecting this tax. It's usually, not always, but a lot of times it's around sales tax. They audited me and they said I should have been collecting this all along. And I think MRS has either changed their position on this or I just wasn't aware of it. And because I haven't been paying it, and because I've talked to others in my industry and they say they're not paying it, there shouldn't be any fiscal note if the legislature were to confirm that the law is the way the taxpayer thinks it should be. I haven't been paying it, so it can't possibly be in your baseline. And since none of my colleagues are paying it, it can't possibly be in your baseline. There's two reasons why usually that will have those types of proposals will have a fiscal note. One, usually when we look into it, there are businesses that are in that particular sector that have been following the law the way Maine Revenue Services has been administering it, and there have been tax revenues coming in for that type of activity. And if the legislature were to change that, there would be a fiscal note. The other is that, as each of the divisions, certainly sales tax and income tax pointed out, we're always doing audits of taxpayers. We have a collections division that are collecting unpaid taxes. That is all built into the baseline forecast. We understand as forecasters that Maine Revenue Services collects tens of millions of dollars a year based on audit and collection activity, and that is going to continue going forward. And if the bill in front of you is going to prevent us from collecting audit and collection revenue for a certain activity that we believe is in our baseline, that will create a fiscal note as well. Tax administration policy. So sometimes the law is a bit unclear and MRS has taken a certain position on something and is administering a certain aspect of the law a certain way, and a taxpayer comes in or there's a bill presented that kind of basically codifies the way MRS has been administering that law. If that's the case, then the bill is just doing that, codifying MRS practice, and our baseline forecast already assumes that sort of administrative policy, and so there won't be a fiscal note on it. It's rare but it happens. And the two examples I had was the exemption of purchases of hay for horses and the exemption of summer camps from having any lodging tax applied to it. I've talked about the all-knowing baseline assumption. So an example of that is the easiest way is to explain it with an example. There was a requirement a number of years ago from the federal FCC to require broadcasters to convert to digital broadcasting. And that was obviously going to require quite a bit of investment by television stations and radio stations here in the state. There was a proposal to exempt purchases of that equipment from the sales tax. And the argument was, well, you couldn't possibly have included this, the tax from the purchases of this equipment in your baseline. How could you have known that the FCC was going to do this and that, and so forth. And to some extent that's true. There's it's a $70 billion economy. There's a lot of activity that's going on out there. There's businesses starting, there's businesses closing, there's new industries coming into the state. We obviously aren't aware of everything, but again, the assumption is that any laws that were in existence on the date of the forecast, any court case decisions, any regulations are built into that baseline forecast, and therefore a tax change that will undo revenue because of those, in this case, regulation has been built into the revenue forecast, and it does create a fiscal note. And then the final example is the but-for test. And again, this kind of gets at the issue of a macro dynamic estimate. We don't do macro dynamic estimates. And for many years, there would be bills that would come before the legislature that would require a but-for test. So a business was going to be eligible for an income tax credit. And before they could take the credit, they had to certify that but for this legislation, they would not have engaged in this activity. They wouldn't have hired these employees. They wouldn't have purchased this equipment. They wouldn't have located in Maine. And therefore, it couldn't possibly, passage of this law couldn't have, this couldn't have been built into our revenue forecast. But again, we don't do dynamic estimates. And the assumption is the economy, the size of the economy can't change. And so the so-called but-for test doesn't get around a fiscal note. And the last thing I'll say on this is, again, these are kind of the rules of the game that that Office of Tax Policy and OFPI have followed for years and are always evaluating and so forth. But this is the approach we take. I think this is the last table I have. Just briefly talk about distribution tables and the use of distribution tables. So these are a little bit like dynamic fiscal notes in that they're very complex. They require a lot of information, a lot of assumptions, and in some cases, a lot of time. And so the production of a distribution table, we're happy to do them, but in some cases, they're pretty straightforward. Again, if you were just looking at a change in the tax rate or something like that, we can probably easily do a distribution table to show you, where that change is taking place across the income distribution of Maine taxpayers. Who's getting the benefit? Who's getting hurt? Is it a regressive change, a progressive change? How many taxpayers have an increase? How many have a decrease? What's the average impact on lower income people versus higher income people? I'm sure people have seen these, particularly at the federal level, around tax proposals. They were very prominent in the federal tax reform back in 2017. They've been important parts of varying tax bills that come before the legislature here in Maine. Again, there's a lot of assumption in many cases that go in behind these. The more complicated the proposal, the more assumptions, the less certainty we would put on our analysis of the impact of a change on taxpayers. And we'll certainly point those out. I really look at distribution tables as an additional piece of information available to you to help you make a decision, but with the understanding that these are not perfect in any ways. There's a lot of guesswork that has to go on with these, and to kind of take away from them the sort of rough information that, clearly this is going to help people primarily at the lower end of the distribution, primarily elderly households, primarily homeowners as opposed to renters. Kind of taking away the big high level conclusions and not put a lot of certainty on maybe some of the more finer aspects of these, just because we have limited data, and we do have to make a lot of big assumptions about it. So that's all I have. Again, I suspect as the session goes on, these issues will come up again, but hopefully this provides you with some background and, again, some confidence that we're not making up as it goes along. This is the process that the state has followed for many years.
Excellent, Dr. Allen. Thank you for that presentation. Is there any members of the committee that have questions for Dr. Allen? Yes, Representative Tax.
I just wondered, I took a lot of notes while you're talking, Dr. Allen, but are those slides available? I'm thinking more for definition as I'm moving through, and I can refer to them.
So sometime today or first thing tomorrow morning, we'll be sending over to Julie my presentation. I think Heather had some information up on that she shared, and any other information that the directors think the committee should have in front of them and available to them throughout the session.
Thanks so much. I'm not sure my notes are going to be readable after today, so thank you. Thank you for that.
Excellent. Yeah, thank you, Dr. Allen. I think that'll be really helpful for us. Any other members of the committee that have questions for Dr. Allen?
I do.
Yes, Representative Terry.
Thank you, Mr. Chair. Dr. Allen, thank you so much. I really appreciate hearing this again, and could hear it maybe 4 or 5 more times, and maybe I'll finally catch up. For the other members, the books are the books that we usually get at this time are going to be coming to us electronically, and they are very helpful for reference over the course of your time on the tax committee. I'm really glad that MRS will be part of the public hearing process more. I think that direction will help us with our work so much, and hopefully keep us at a pretty quick clip. And I also just sort of lastly want to Dr. Allen said it already, that these reports that are sent to us monthly are so incredibly important to read. I know for me, it's kept me over the course of the summer, especially with good high hopes that we'll be able to get out of this pandemic mess without pulling our hair all the way out. They're for the most part, despite all of the stuff that's going on, are very optimistic. I highly encourage everybody to read those as they come in. And thank you again, Dr. Allen, to you and everyone else that's presented so far today. It's always really helpful to hear from the worker bees behind policy. So we appreciate it. Thank you.
Excellent. Dr. Allen, I just had a question. I know that we've seen different estimates over the last 8-9 months or so in terms of the revenues and the shortfall that we'd have to make up for somehow. And it's really ranged a lot from, I think, at the beginning of the pandemic around, I saw something around $1.4 billion over the next 2 years that we were going to lose in revenue, and I've seen it go down quite a bit to, I think, around 500 or 600 million now. Is that where things currently stand, and how do you see things trending over the next few months in terms of data that you've seen over the last 1 or 2 months?
So it has come down quite a bit since August. One key factor is when we produced the August 1st revenue forecast, that was based on an economic forecast from the Consensus Economic Forecasting Commission that they developed at the end of June. So that was still in the early stages of the reopening of the economy across the country and here in the state. It was in, a lot of those CARES dollars had already started going out, but it was still in the early stages of the pandemic. And the general consensus was that, this was unusual, it was unprecedented. And the feeling was that even the strong federal response wasn't going to be enough to offset the decline in the economy. Between that August 1st forecast and that December 1st forecast, it became clear that the federal response was of such a magnitude and was done just so quickly and was so effective that the national economy and the state economy just performed much better than anybody had anticipated over the summer and throughout the fall. And that's why the revenue forecast did improve so much on December 1st. When we met when both the CEFC met at the end of October and when the RFC met at the end of November, the concern was there going to be another stimulus package? At that point, a lot of the programs that were in the CARES Act were in the process of phasing out. So those unemployment benefits, additional unemployment benefits, were either completely over or about to be over. The PPP program had pretty much ended. The stimulus checks that had gone out in the spring, while a lot of it was saved for a lot of lower income people, that allowed them to pay their rent, buy groceries, those type of things, that had now all been utilized. And so there was a lot of concern going into the winter that stimulus now had played out. We were going into winter in Maine, so you had a home heating oil season, which is always a burden on low-income families here in the state, no matter what those prices are. Restaurants were now going to be challenged by not being able to serve, the same number of people indoors. And I think the concern was that Congress wasn't on track to pass another stimulus package until maybe the first quarter of 2021. So that kind of played into that December 1st forecast. We now know that Congress did respond with a fairly significant package at the end of December. So I think now people are feeling a little more optimistic that the first quarter of this year is going to be a little stronger than we anticipated. Again, I think it's become clear after seeing December revenues and getting some initial information on January sales tax that the holiday season went a little better than we had anticipated. And I think a lot of that is because there's a large segment of this economy that has continued to do well throughout the recession. And those stimulus checks have provided even more income that allowed, are continuing to allow them to go out and buy automobiles, appliances for their homes, furniture, those types of goods, and it's keeping our sales tax line up. On the income tax side, it's becoming clear that some businesses that were initially concerned that they weren't going to do well have done better than anticipated. There are still others that are clearly struggling, and we've tried to take that into account. I can't use the word unprecedented enough. We're really learning as this thing goes along. There is no roadmap for a pandemic-induced recession. Even the Great Recession of 10 or 11 years ago, that was a financial crisis. And there are plenty of examples within the US and across the world of a financial crisis and how that plays out. And for the most part, the financial crisis back in the 2008, 2009 pretty much played out exactly the way most of the economic literature would say it should have. It was a very slow, long recovery, and that's usually what happens with financial crises. A pandemic in an industrialized world on a global basis is all new. And I think we all estimated the impact of the federal stimulus package in the spring. It had a much bigger impact than anybody, I think, really imagined. And that's why you've seen at the federal level, at the state level, the economic forecasts and the revenue forecasts improve as we've gathered experience with it.
Okay, just one follow-up to that I have is, what has been the biggest sort of loss of revenue? Like what area? Has it been in meals and lodging, or has it been in income, or?
Yep, clearly meals and lodging. Early on, say April, May, June, on the lodging side, we were seeing year-over-year decline somewhere between 70 and 80%. Again, unheard of. I mean, and on restaurants, early on, we were seeing something in the down 50% year over year. When we met at the end of July to produce the August 1st forecast, again, we didn't have a lot of data yet on the summer tourism season. And we thought the lodging sales would settle in at somewhere around 50% decline, July, August, the height of the tourism season, and extend a little bit into the fall. And we thought restaurant sales would be down about 30% year over year during the summer months. As it turns out, that was too pessimistic. Lodging sales ended up being somewhere closer to 20% on average down. Some months only 15% down. I say only down 15% again. That's relative to 80 or 70% down in the spring. I mean, those are still dramatic declines, particularly in that segment of the economy. Restaurants and lodging usually perform much better in a recession than automobile sales or building supply materials. This has been the complete opposite of what we normally see. And that's one of the reasons why, quite frankly, we've been so wrong, particularly on sales tax in this recession. Our sales tax base is heavily reliant on the sale of goods. We don't tax a lot of services. And I have a slide that I have used to present in different settings of, if you look back at the Great Recession, consumer sales plunged during that recession, as you would expect, but it all came from the goods side of the economy. The service sector, continued to grow. Not much, but it continued to grow. And if you think back to that recession, it makes perfect sense. Which were the two hottest industries hit during the Great Recession, right? The housing market and the automobile industry. So, our automobile sales plummeted, building supply material sales plummeted. This has been the exact opposite recession It's the service sector that's been hit the hardest. In-person activity, right? Nobody's going to the theater. Nobody's going to sporting events. Nobody's staying at hotels or going out to restaurants. Anything where you've got to be in person, out in a crowd, that's what's been hit the most. And for the most part, we don't tax any of those things. The only services we really do tax are meals and lodging, and those have been the two that have been hit the hardest. We've seen a tremendous increase in automobile sales, a tremendous increase in building supply sales. And the last point I'll make on the sales tax, and the legislature and the governor have, they should be patting their backs because it was a wise decision. If you remember last session, you passed the marketplace facilitators tax, requiring marketplace facilitators to tax and remit sales. This whole, again, it's been a recession where people are staying in their homes, going on the internet and ordering goods to be delivered to them, don't want to go out in person. The fact that we're getting tax on all of those remote sales have really saved us in this recession. The growth, the movement towards remote sales has been tremendous. And that's revenue that the state is getting. And that's another area where we didn't have any experience with that. All of the taxation of remote sales, the ability of states to collect that is primarily based on the Wayfair decision, which came down from the US Supreme Court in June of 2018. And that was one of the issues internally that we were talking about. How's the next recession going to play out now that we're getting these remote sales? How do remote sales react in a recession? We never imagined it was going to be a pandemic-induced recession, but it has really saved us quite a bit and is one of the reasons why the sales taxes has performed as well as it has.
Yeah, I'd like to echo what you said about the marketplace bill. I think we were really wise to do that when we did. I'm glad that we did that. Probably saved us from being in a much worse position than we're actually in. And everything you said about restaurants and hotels and that kind of tourist related stuff definitely coincides with it. I think what we're all seeing out on Main Street in our districts. I do worry about the longer term effect, how Maine's economy is often slower to recover than the national economy and sort of having it drag on longer than we'd all like it to. So hopefully that doesn't happen this time around. But thanks again so much for your presentation. You're a wealth of information for us, and for members that are new to the committee, Dr. Allen will be with us frequently and is a real wealth of information for a lot of these areas. We're really lucky to have you here working for us here at the state. So thanks again for your presentation. And is there any additional questions from members of the committee for Dr. Allen? Seeing none. Thank you so much, Dr. Allen. So I guess that concludes our orientation for today, unless there's anything else committee members would like to discuss or talk about. Do you have anything, Representative Terry?
I would like to thank Representative Sachs for sending that PDF. That's going to be really helpful for our work going forward. Thanks very much for that. And Julie, it looks like you've got something you want to share.
Yes, I just wanted to mention, Mr. Allen said that they would be sending over the materials that they showed you today, and I will make sure that I get those to you as soon as I receive them. Also, I sent out an email earlier this morning, but some of you have obviously been busy and may not have gotten to it yet. So I just thought I would mention, I will also be sending you materials that relate to the budget provisions that you'll be hearing with the Appropriations Committee on Monday at 10, I believe. So we actually have copies of the actual pages from the budget that's been submitted by the administration. And there'll also be a summary chart of the provisions that relate just to the Taxation Committee related provisions, not all the other things that are in there. That's it.
Okay. So I guess, am I correct, Julie? We're going to be scheduled to attend a hearing on Monday, the 25th at 10 o'clock a.m. with appropriations regarding the tax provisions and the supplemental budgets. That'll be the next time that we get together as a committee together with appropriations.
Yes, and I believe that you have, while this meeting has been going on, I think the links have been sent out to you for the Monday morning meeting.
They have.
So
Yep.
10 o'clock, and then we'll just go to a link on Zoom to be brought into a meeting with the Appropriations Committee.
Yes, I think it may be somewhat, where it's a public hearing, I think the process may be a little bit different. I don't think that you'll have the ability to talk in the meeting as you have during this one, unless the person running the meeting promotes you to a participant, but I'm not sure how that's going to work. I'll try to get that information from Maureen Dawson, the staff for AFA. Can tell you a little bit more about that, but there are at least two, if not more, I don't know. But I only know about two forms of Zoom meetings. One where anyone who gets the invite can, turn their microphone on or off to speak. There's something else called a webinar, which works differently, and I've never really been part of one of those, so I don't know very much about it.
Okay.
We'll get to practice.
So I guess we have a couple members that have questions. I guess I would just, to your point about whether we can speak or not, if you could ask Ms. Dawson if we can, advocate for us to have the ability to ask questions at least, because in the
Yes.
past, when we've had these combined meetings with AFA, I think with all the other committees in the legislature, when you meet together with AFA, the committee meeting and the inner horseshoe has been able to ask questions that they've had throughout the proceedings. So it'd be great if we could do that again, in this format.
Yes, you're right, and I think they've probably taken that into consideration. I need to check to make sure.
Okay, great. And then we have a couple questions from Representative Matlack. You have a question?
Maddie was first.
Oh, Senator Daughtry, you have a question?
No worries. I was just going to say, I unfortunately won't be at the appropriations meeting. I'll be chairing education. So I'll be counting on all of you to catch me up to speed.
Yeah. And that's actually my concern also. I can't be there on Monday, but I was wondering whether you can access the hearing on YouTube or find it somewhere else and then be prepared when we actually talk amongst ourselves about the budget.
You should be able to access that on YouTube, Representative Matlack. And I think that what we were talking about on Tuesday with Julie, when you go to, I would imagine the AFA page, not the tax page, you should be able to access that link after the fact. I think for our meeting, the other day, I went right onto our tax page, and it took about 2 minutes for it to load after we finished our meeting.
Okay. Any other committee discussion? Or are we all set for today?
I just want to quick ask our new members how you're feeling, if this is overwhelming or I think once you get the book, you'll be able to access any questions that pop up in the middle of the night, which is what happens to me. But I just wanted to check in with Senator Daughtry, Representative Sachs, and Representative Carmichael, and see how you guys are feeling, making sure you're all okay with it.
I'll say for me, it's definitely a whole new ball game, and it's definitely like information overload. But I think any committee subject is that, and it's also really exciting. And I can't think of a more important time to be on this committee or looking at this type of work. So again, it's going to be a lot of reading and asking questions over and over again.
Great. Representative Carmichael?
I agree with Maddie that it is a lot of information, and maybe doing it remotely, we kind of at a bit of a disadvantage, but we can use it as an advantage as well. So yeah, I'm looking forward to moving ahead with it.
Great. Representative Sachs?
Oh, same. They talked about the fire hose of information. This is a fire hydrant. Just want to be clear about that. Yeah. But I have I've put aside my Saturday time to start looking and doing a little light reading while it's nice and cold out. So yeah, but I agree with Senator Daughtry. There is no better time to be engaged in this work. So really excited, and really thank you to the many members of this division and state services who have come today to fill us in and give us an introduction. So I really appreciate that.
Absolutely. I echo that as well. Thank you very much, everyone. We really appreciate it.
I just got a text from Representative Collins who said he's fine. So I guess that means he doesn't have any concerns and everything's going well with him. So great. And Julie, do you know if we'll be able to get like the red book sent to us or put it in our legislative mailboxes or something? I mean, I just think some of these books, particularly the red book, would be handy to actually have a printed copy for some members. I know myself, I'd really appreciate that. Is that possible, or is everything just strictly electronic at this point?
The Red Book is a biennial report, which is due February 15th. So the one that comes out this year will not be available for 3 or 4 more weeks. There are limited copies of old ones that are available. They are available on websites, and I can send you a link to it, but the most recent one won't be available until February.
But we'll be able to get printed copies at that point, you think? Or?
Yes, well, yes. Assuming, yes, I believe we will, assuming they provide them to us. We will do that. We have to figure out how we're going to do that. It's easy to email it to you and to post it online. Getting a paper copy to you, especially when there may be lots of things that you'll want paper copies of, is something that'll be difficult. We're not supposed to be making copies for you. Well, I'm not supposed to, and Avery's not supposed to. And I'm not sure. I mean, I think probably what we would do, I mean, you still have like your mailboxes in the post office up on the 3rd floor, right?
Yeah.
I think things might go in there. So whenever you're in the building, you could pick it up. Or we'll find another way to put them. In the past, there were folders in the taxation committee room. I don't know if we can do that or not this year. I'll have to check with Avery and find out whether the new system, whether the new world permits that kind of thing now, but we'll figure something out.
Yeah, okay. Yeah, and your legislative aid for all of us on the committee can print anything that you'd like printed. So that's also an option. Okay, great. Well, I guess that concludes our work for today. We're ready to adjourn. Would someone like to make a motion to adjourn?
I move to adjourn.
I'll second.
Great. So it's been moved by Representative Matlack and seconded by Representative Terry that we adjourn. So we will adjourn today's meeting of the Taxation Committee.